I think the next panel is now the finance people that are working with us on issues of financial inclusion. So, and that panel is going to be chaired by Corrinne. So Corrinne, it's all yours. You'll be seen.
Good afternoon, everyone. Good afternoon, everyone. Can you see me? I just happen to be blessed with height. So thank you very much. This is very humbling for some of us, particularly those from the financial sector background. My background is actually in financial services, but currently working with Save the Children. And I have to say thank you to Fred and his team for strategically putting us in the afternoon after having flown for so many hours last night, and at this time our people at home are asleep. So I think we were supposed to bank on our anticipation to present to keep us awake. So thank you for that, Fred, and for this invitation. I have to say, for me, and I'm sure even my colleagues would agree, sitting here and listening to a lot of wonderful insights, particularly from the academia, from the field of academia, is really, really humbling. We've learned a lot, and especially hearing the need for an integrated approach. It's been really fascinating. So we're finally getting to hear what the financial institutions are going to talk about, and pretty much what their experiences are around promoting promoting asset building amongst adolescent young people. And I'm reminded of recent studies by the FSD, Financial Sector Deepening. They have a series of studies called the FinAccess. Maybe some of you know about it. And a recent study actually shows that there is an increase in financial inclusion in adults, particularly in East Africa. And we don't know whether this is actually a reflection of adolescent young people, so it's yet to be seen. Particularly in Kenya, it rose from 41.3% in 2009 to 66.7% in 2003, but we still feel that there's a long way to go, because there is need for policymakers, government, to actually strengthen the financial systems, to be more efficient in supporting financial inclusion or financial agenda for the populations, particularly for young people, and really interesting to know what the role of young people is in pushing for this agenda. So it is my privilege to introduce financial service providers who will give us a perspective on what is the value proposition really for promoting asset building amongst teenagers who a lot of financial institutions feel are a risk because of their potentially high mobility, and it's not really a profitable target group. So why is this really important for financial institutions, particularly for vulnerable young people? And how can these young people actually contribute to the financial inclusion agenda in our countries? So with us, we have Kasio Mutuku. Kasio Mutuku is the lead banking representative of the Youth Safe project, of which I am a part of, which is funded by the MasterCard Foundation project in Kenya. And Kasio holds a BA in Economics and Sociology from the University of Nairobi and a postgraduate diploma in Financial Management with emphasis on branch management, and has worked with Postbank for 23 and a half years. Currently, he's involved in the Youth Safe Impact Assessment and text messaging studies, which are actually being led by Fred, funded by Columbia University ICAD in partnership with KIPRA and the Center for Social Development and Save the Children. Sylvia Nabakadde, I hope that's the correct pronunciation, is the branch manager with Centenary Rural Bank in Uganda. And in her role as a branch manager, Sylvia supports the Subi Uganda studies under ICAD, Centenary Bank is one of the financial institutions that holds the child savings accounts for the SUBI and Bridges participants who are located in more than 50 schools in 6 political districts. The bank is also one of the largest financial institutions in Uganda, targeting urban and rural poor. And I should also mention that Kenya Post Bank is one of the largest banks, having 98 branches across the country, and has recently been recognized in the field of providing innovative financial services and products which young people are actually enjoying. So please support me in welcoming both, and I think we will start with Sylvia's presentation. So welcome, Sylvia.
Good afternoon, ladies and gentlemen. Good afternoon. Okay. Sylvia is my name, as Corrinne has mentioned, has introduced me. I'm the manager, branch manager, Centenary Bank in Chotera branch, Rakai district. And I'm glad to make my presentation in front of you here at University of Chicago. The topic, partnering with research institutions to address poor children's economic status through the use of banking services. I request the person, I read myself, okay. That is the summary of the presentation. We shall have Centenary Bank overview, the general status of our people in Uganda, partnering with ICHAD, benefits, challenges, and the future. In the picture you see, that is Centenary Bank head office, our headquarters in Kampala, in the capital. Overview, Centenary Bank started as a trust in 1985. And you realize from the previous speakers, that is when we were experiencing a very high rate of HIV. That is when Centenary Bank started as a trust. Then it became a full commercial bank in 1993. And around that time, that is when the branch in Chotera was opened up. AIDS was so high in Rakai, and almost no financial institution wanted to open up in that area. But Centenary Bank, being the pioneer institution to work with the rural poor, accepted to open up a branch in Rakai district. That is the mission. That is the mission of the bank, as you can read on the screen. We are basically providing appropriate financial services, but especially microfinance. That is what we look at for people in Uganda, but particularly in the rural areas. That is why it is Centenary Rural Development Bank. We are networked. Currently, we have 63 branches, which are interlinked, and we have 147 ATM points. That is automated teller machines. And we have correspondent banks in the US, we have in the UK, we have in Kenya, we have in Sudan, and so many other countries. General status of our people, as many people have presented before, people are poor. They are poor rural farmers. They are affected by disease, especially HIV, AIDS, and malaria. We have very high productive rates. There's a generally low literacy levels, high maternal and infant mortality rates, high teenage school dropouts and pregnancy. Sorry for that. Yeah, that is where we are. High teenage school dropout rates and pregnancy rates. They're very high. Partnering with ICHAD. We started partnering with ICHAD in 2004. I joined the bank, Centenary Bank, in 2001. I've been working with Centenary Bank for almost now 13 years. And we partnered with ICHAD in 2004. I was a supervisor, a branch supervisor then. Incidentally, I was again in the same branch. And then I was transferred to other branches in Kampala and other parts of the country, but then came back as a branch manager. So we started partnering in 2004, opened up branches, rather accounts. As you can see in the picture, we're opening up accounts for orphans and vulnerable children. Our responsibilities is to sensitize the young people about saving, visiting them in their schools to open up accounts, encouraging young savers by giving them accounts which are not charged, they are charge-free. And again, we restrict the withdrawals. What I mean here, the guardians, because these accounts are opened by the guardian in trust, by the guardians of these children. So the withdrawals from these accounts are restricted to just 3 withdrawals in a year, because the major purpose of this was to restrict misuse of these funds such that it only goes to the intended purpose of maybe school fees and other serious necessities in life. Benefits, we have had several benefits from this partnership, as you can. Yes, please, thank you. The young poor have started liking the idea of saving, they like it, and of course, through this, they also talk to their guardians and they come and open up accounts. Then the village people can now come to the bank freely. They don't fear the bank because we have talked to them. Then we do financial literacy. We teach the youth on how to manage their finances, how to use credit, because we give these youth microcredit. We give them loans from, say, $50. That is the beginning point for loans. So in the picture, you can see we had just given a financial literacy program in relation to International Labour Organization. We had partnered and we had given them that training. So those are that is the picture. That is what it is talking about. The bank has introduced insurance for these accounts such that when the guardian passes on, there's a particular sum of money we give to the beneficiaries. Then there's a cordial working relationship. We've been working, some of those people are here. You've seen some of those people who are in the picture. They had visited the bank. So we had a picture with them, as you can see. Then we have opened up accounts, over 700 accounts just for the SUVI project. And of course, this is in addition to other accounts because the SUVI accounts are matched accounts. What the children save on the accounts are matched through the SUVI program. So we have opened over 700 accounts, and we believe it is going to make a very big impact. We do CRS on the part of the bank. We do CRS. In the picture, we are donating some items. We participate in health days. We partner with institutions to improve the health conditions of the people, like we are working on cancer. We partnered with Zambia Hospital and Rotary International to construct a cancer ward in Zambia. Then we hope with this collaboration of research institutions, but especially ICHAD, we are going to reduce the teenage dropout rate. And of course, because these people are going to be educated, they are going to improve their health status. Challenges, we have challenges of guardians and caretakers. Some of these, because of poverty, some of these guardians come and withdraw the money for the overseas. Because remember, these accounts are not wholly managed by the young people. Some of these guardians misuse the funds which are deposited on these accounts. There is disease, especially HIV and malaria, which hinder saving. Orphanages, we have orphanages in the country which tend to, they tend to be helping the orphans, but they don't impact skills on them. Limited funding on the side of the research institutions. There's a lot of stigmatization, which has already been talked about. High infant and maternal mortality rates inadequate infrastructure development, especially roads, hospital, energy, and ICT, because you realize many of the financial institutions are failing to put up banks and other financial institutions in the rural areas because of the poor infrastructure. The future, there is need for sensitization to our people about saving, and of course the other challenges we have, HIV testing and counseling, we need to sensitize people. Donors need to increase funding related to economic empowerment of the poor. There is need to empower vulnerable children with mental skills, because instead of giving them handouts, we need to give them mental skills so that they can be sustainability. Financial institutions need to design products which are suitable for vulnerable children. Maybe if it's savings, we need to think of something better. We need to think of something that can motivate the young people. We need to put more incentive on savings. Yes, thank you. I have just 1 minute. We need to put savings, like in Uganda, it's only matching, but if we can also introduce cash transfers in Uganda, that would be very good. I think cash transfers is also good, for as long as we can know how this money is used. Then if we can enact a law that empower young ones to manage their finances, especially saving and credit. Then if we can also introduce appropriate technology in ICT, like e-banking, where they can just bank and save from anywhere they are in the villages, so that they can improve on their bankings. That is acknowledgement, Centenary Bank, Dr. Fred, the US government, and the conference sponsors. Thank you so much.
Good afternoon, all of us. I think we all know the connection between Kenya and Chicago. That I think we have contributed immensely by the father of your president having come from Kenya. So I'm delighted to stand in front of all of you and talk to all of you about our experience in promoting asset building among the Kenyan youth. And I would say that the Kenyan financial sector is in developing. It is composed of several players. And what we have noticed is the fact that the ownership of all these, of all the financial players determines the direction that the financial players take. And in this case, they may not be very much interested in the youth, because the youth may not be giving them a lot of profits. Majority of the Kenyan population is composed of the youth, the unemployed, and mostly people in the lower part, the lowest part of the economy. And asset building in this section is not very much promoted. We have noted that financial exclusion, especially in this group, can also bring political instability, and therefore any bank that thinks of banking the youth is the bank that moves in the right direction. The youth in Kenya comprises of around 65% of the population, and in this case we are talking of the group that is below the age of 28. And therefore, any bank that thinks of banking the youth is the bank that thinks about its own future, and any country that thinks of banking the youth is the country that thinks of the future. Kenya Post Office Savings Bank, Postbank, has got 3 products that are tailored for the youth. And we did a research on one of the products that we partnered with the other partners, including Save the Children, and came up with a product that we call Smarter. And this product is the one that is the basis of the 2 studies that Fred is conducting in Kenya. Then, as we are doing research, some of the youth, we have found out that some of the youth have been saving even without some without formal savings products. Where have they been saving? Some of them save under the mattress, in their socks and shoes, in empty boxes, underground, geometrical set in school, and sometimes in the save teens. But with the coming up of the youth save product that is smarter, now they are able to save in a formal bank and they save with us. Indeed, this product and other youth savings products, they are the highest growing products in the bank's number of accounts. And most of the youth that we have in the country, they can save in our branches and they can save in our agents. Now, what have we learned as far as youth saving is concerned? We have learned that appropriate financial services can help households improve their welfare and spur some small enterprises activities among the households. And with this, we have learned that savings banks need to cultivate savings culture amongst the youth at a very early age. And savings education is also very important, being included in school curriculum, savings clubs, and indeed educational institutions, including the universities, should play an active role in this area. One of the questions that we have been asking in our country and in Kenya is that, can the government open savings accounts for the youth in each and every county? But one of the biggest challenges that we have at the moment is the fact that all the youth accounts, the youth must be having documentation for them to participate in the financial institution. And most of them do not have the required documentation, especially ID cards. And in this case, most of them, their accounts are operated by their parents, but the smart account was formed, or rather came up to answer this challenge, or rather to sort of address this challenge, because the youth have got an ownership stake by the fact that they can deposit on their own without the parents being there. And in this case, they are given an they are given an ATM card, a saving diary, and once they save, they can record all the savings that they do in their diary. And what we have found out is that most of the youth are excited about owning an account. And indeed, they are even acting as marketing agents for the bank, because they talk to their friends, they talk to their peers, and their peers are also coming to open accounts once they see their friends having an account. As of 5th of this month, the bank had opened a total of 78,000 accounts. And 83% of these accounts are participating in research. So, therefore, we are also contributing quite a lot in terms of getting to know what do the youth want and which direction are they going into. How do we mobilize these numbers? We have mobilized these numbers using staff members of the bank and also partners, including Population Council and other NGOs. Indeed, we are also using bank staff to encourage the youth to open accounts and continue using these accounts. Over and above that, we are using youth-friendly approaches like going to radio stations that address or that communicate directly to the youth. And as I've said earlier, the Smart Account is a framework of the studies that Fred is conducting in Kenya. What are some of the challenges that we have noted? One of it is accessibility. When the branches are very far from the youth, they are not able to gain access to the banks and bank. Other challenges are prohibitive fees, especially opening balances to maintain the accounts. Requirements, legal requirements, especially where youth under the age of 18 are not allowed to have a contract with the bank, is another prohibitive aspect when it comes to youth savings in Kenya. What are some of the emerging innovative ways that youth are engaging into? One of them, they pay for transport, paying for goods and services, paying for bills, purchase of airtime, internet purchase, and the like. And then we ask ourselves, when should the youth be free to fully participate in the financial sector? The answer is now. We do not have to wait. Now, as we move forward, we realize that financial institutions need to design and deliver and market products that respond to youth needs. Because the youth confronts the market, massive market for the banks. As Fred told us in the morning and as we have learned, any bank that does not think of the youth is the bank is not have any future, because the youth are there to stick with the banks. The infrastructure of branches that in terms of agents, in terms of ATM, are supposed also to think about the youth and their aspiration. What is the future of the Kenyan youth in banking? The aspect of convenience, accessibility, cost, support, security of mobile payment systems have led to our usage by individual micro businesses in the country. And it is estimated that more than 74 mobile phones for every Kenyans, well above the African average of 65. And most of the youth are in step with this. And indeed, all the banks that are coming up, they are coming up with aspects that promote the mobile usage in the country. The impact assessment. Now, as I said earlier, as a bank, we are participating in the impact assessment in Kenya. What is it that we are doing? We have selected, at least out of our 99 branches, we have selected 66 branches to participate in the impact assessment. And what is it that the branches are supposed to do? The branches are supposed to understand the objective of the study, and they are supposed to identify the schools that are supposed to participate in this study. And at the moment, we have got more than 600 schools that have been identified that will participate in these studies. Our branches are supposed to ensure that they get authority from the school management so that the schools can know the importance of the study and participate in it. And also at the same time, our branches are also being used to assist in identifying suitable research assistants. You will be surprised that there are some areas where research assistants from the Christian faith may not participate in research using Muslim children. So when it comes to some of these dynamics, it's very important for the branch to participate and come up with the right research assistants for the research to succeed. They're also supposed to introduce, the branches are also supposed to introduce research assistants to the schools and ensure that the research assistants are very comfortable in operating in these schools. And of very much importance, when it comes to marketing activities, we are supposed to ensure that the schools, or rather the branches, market in the areas where they have been directed to market. Now, what criteria are we using in Postbank to identify the schools? The schools must be mixed, that's boys and girls, must be public primary schools, such that we can ensure gender balance, must be within a distance of 5 kilometers from the branch, such that they're accessible by the research assistants. And the branch manager or member of school of the branch must be somebody who is known to the general management of the school. This is to ensure acceptance. And the school must be a school where the bank has not done marketing to the youth. This is to avoid any contamination. Now, what about the research assistants? The research assistants must be Kenyans who hold either national ID or passport, must be between 18 and 28 years. This is to ensure that they are able to work with the youth, they are able to relate with the youth that will be researching on, must be a resident of the branch area and be available for the research, should not have any criminal record and must be of good conduct. Minimum education is a university degree and must be prepared to abide by rules and code of conduct as set by the research, and must be prepared to work and respect the youth must hold an account in the bank and must be prepared to undergo child safeguarding training and risk assessment. What are some of the opportunities that are there for all of us? In terms of research, there is a lot of activities in Kenya where we can do research on household vulnerability versus asset building, the impact of youth savings in the household, community, participation of parents, guardian, and caregivers in future studies. Sustainable, it must be high impact models, e.g. partnerships, linkages to other NGOs, and relevant government agencies and institutions of learning. Establishment of permanent offices to coordinate various studies of youth asset building in the country. As we have found that in Uganda, they are very active, but in Kenya, we do not have a lot of evidence of this. And there's also a lot of, body of youth who are out of school, and this is an area where people can conduct research on. Other areas that we can do research is on asset building, parents as potential customers of the bank, as potential agents in the bank, through financial education conducted under the Youth Save project. Youth below the age of 12 are requesting to open accounts. That's another area. What research can we do in this area? Youth outside financial establishment are also opening accounts and building assets. There is also an area of suggested policy changes, especially to register youth under the age of 12, so that they can own documents and participate fully in the financial sector. Now, as we said earlier and as we saw in the morning, non-banked parents, guardians, caregivers are also opening accounts after they have learned from their youth that they're opening accounts in schools. And one of the major problems that we have also noted, indeed, yes, thank you. Indeed, some of the parents are indeed discouraging their children to own accounts, especially for those children who do not own, especially for those parents who do not have accounts. So I think thank you very much for listening.